panel on the role of institutional investors in Latin America's economic recovery. Thank you for joining us. At the outset, I'd like to ask everyone to make sure that your microphone is on mute so we can avoid background noise. It is my honor to introduce Susan Greenwell, Senior Vice President and Head of Government Relations at MetLife, and one of our board members who will be moderating the panel. In her role, Susan serves as an advisor to the company's business leaders and supports MetLife's position in all relevant political, regulatory, and legislative arenas in the United States and in nearly 50 countries in Latin America, Europe, Asia, the Middle East, and North Africa. The portfolio must give 24/7 a new meaning in times of COVID, and Susan is a new mother to boot. Before I turn the floor over to Susan, please let me remind our participants that this session is on the record and it is being recorded. It will be available on our website in a few days. We will be keeping everybody's audio muted except for the speakers. We ask that you please keep your lines on mute throughout unless you're called on to speak. Following the panel, we'll have time for questions, and if you have a question or comment, please communicate with ASCOA programs via private chat using the WebEx chat function, either a private chat or a general one, if you want everybody to be aware to be added to the queue. And now I'll turn over the mic to Susan. Thank you again for being with us today. The floor is yours, Susan.
Thanks so much, Randy, and good morning, everyone. It's really an honor for me to moderate this panel on such an important and a timely topic. But first, I want to thank Randy and the Council of the Americas for organizing the discussion, as well as for attracting such a high caliber of panelists that I have the pleasure of moderating. Once the main impact of the pandemic crisis is over and we start to shift to the new normal, which of course we all hope is going to be as soon as possible, each country in Latin America and the rest of the world is going to be confronted with the enormous task of rebuilding our economies, the productive sector, as well as the social basis of each country. We already have some initial estimates of the expected negative economic impact. The World Bank, for example, expects the region's average GDP growth in 2020 to be a negative 7%, and will likely see significant levels of unemployment, estimated to be over 8% in many markets. In this long and difficult process of economic recovery, one of the most relevant players is going to be institutional investors. And among those, pension fund managers and big asset managers like BlackRock are going to be among the most significant actors. The decisions that they make, what sectors they'll invest in, who they'll partner with, and certainly the relationships they're going to build with governments, regulators, and other stakeholders in the process is going to have a direct impact on the course of each of the economies. That's why I believe this is quite a timely topic, and I can't think of a better or more qualified group of people to be addressing this matter. Let me start with Bernardo González, who's currently the president of the Mexican Association of Retirement Fund Administrators, or Amafore. Prior to taking over the association last year, Bernardo worked in various roles as a financial sector regulator, including serving as the chairman of the National Banking and Securities Commission in Mexico. Next, we have Fernando Larraín, who's the CEO of the Chilean Association of Pension Fund Administrators. Fernando's held academic policy positions throughout his career, including posts with the ministries of finance, energy, and the economy. And last, we have Diego Mora, who's head of Colombia, Peru, and Central America for BlackRock, and has worked across Latin America in his extensive finance career, including with BlackRock as well as Scandia and Citi. So as Randy mentioned, I definitely want to have this be an interactive and dynamic discussion. So I have a few questions to get the conversation going, but your questions are going to be a lot more interesting than mine are. So please jump in, use the chat function, or let the ASCOA program know that you have a question, you want to raise your hand. We're happy to call on you. So let me start the conversation by asking each of our panelists just to level set by briefly describing the roles that institutional investors, such as pension funds and asset managers, currently play in the Latin American economies that they know best, and how the pandemic is impacting these roles. And Bernardo, why don't I start with you?
Thank you so much, Susan, and thank you. I would like to thank the Council for inviting us to be a part of this panel. I'm really honored. Thank you. Regarding the Mexican saving system, I mean, by the end of May, total savings in the system reached 4.2 trillion pesos, which is equal to 17.3% of our GDP. 2/3 of the growth that the system has had in the past comes from returns that Afores have obtained for workers. For millions of Mexicans, Afores are their first contact with the financial system. Right now, as you know, we are a population of 120 million Mexicans, and around 67 million accounts are owned, Afore accounts are owned by workers in Mexico. So it's the first product, or the most important financial inclusion program or product in the financial system. Furthermore, I would say that for 30% of Mexicans, the Afore and the balance that they have accumulated in the past is their most important savings. It's really it has been something that we didn't see in the past, and we believe it's a huge accomplishment that for 30% of the population, the Afore is so important. The average balance that the workers hold in their individual accounts is around $3,000, 72,000 pesos. And let's remember that in Mexico, most of the workers earn a very low wage, so that's what explains the amount of savings. Nonetheless, it's so important, as I was saying, for so many workers. The investment side has really changed significantly since '97, when this system was created, the individual account system in Mexico. And right now, the Afores, the pension fund managers, are the main institutional investor in Mexico. I mean, the other important industry that finances companies and the government in Mexico are banks, but the most important institutional investor have become the Afores. By May 2020, Afores financing the Mexican firms and productive project was around 1.2 billion pesos, which is trillion pesos, which is around $50 billion. So it is a very important amount of money. $1 of investment, of $4 of investment in infrastructure in Mexico, $1 comes from Afores. So it's really important what we're doing. Right now, the pandemic, as you know, has really affected so many countries and so many industries. We are seeing a lot of withdrawals from Afore accounts from workers. We estimate that around 1.5 million workers will make partial withdrawals from their Afore, and that's because the law since 2009 states that you can have partial withdrawals, not higher than 11.5% of their average account. If they fall into fall to unemployment, so they can make this partial withdrawals. And it's very important because, as you can imagine, in Mexico, we don't have non-employment insurance. So Afores have become the mechanism for unemployed workers to have a source of emergency money. The other part is that the Mexican government hasn't really implemented a program like in the US to send money to all the people in the country to pass the pandemic. And so every person has to see by themselves how they can help themselves. And so the Afore is so important right now because of that. The problem in Mexico, as you may know, is that we have a large population that works in informality, and it's around 60% of the economic active population in Mexico. And so it's really dramatic for them what they've been living right now because they don't have like a public program for supporting them, and the formal workers have these funds that are available because of the law. We have been putting forward some legislative proposals to make easier for workers to access that money, with the idea in mind that the withdrawals won't go further than 11.5% of their balances. So some of the proposals are to waive the waiting period that a worker has to pass in order to access that money, their money, and also there are some weeks that they're discounted from their total account that they have to accumulate in their working lives in order to achieve a pension. So we are also asking the legislator to waive that discount in the weeks, in the working weeks. So hopefully this can be heard. We are also, of course, channeling funds. We've created some initiatives with the investment CIOs in the Afores, so they can channel funds to areas of the economy that would require growth capital. And we are trying to coordinate a response on the part of the Afores to reinvigorate the economy and try to start the engines again. I think we haven't seen the worst of the economic consequences of the pandemic. We're not even out of the pandemic in Mexico. Every day we are reaching higher numbers. And so the profound effects of this crisis would be seen in the coming months. So right now we are putting forward these proposals, but we are being very careful of what's going on to be also proactive in putting forward solutions and be part of the solution and not the problem. So I would stop there, Susan.
Great, thank you, Bernardo. And Fernando, I'm sure as you were listening, some things were familiar, right? Bernardo shared that Afores make up 17% of Mexico's GDP right now. Chile has had a similar private pension system in place a bit longer than Mexico, and the percentage of GDP in Chile is quite a bit higher. So can you tell us, Fernando, a little bit about the role that AFPs play in the Chilean economy, and also how the pandemic is affecting that?
Yes, hi. Hi, Susan, and hi to my colleagues on the panel, and thank you for the Council of the Americas for the invitation. I'm going to try to be very brief here. I think the role of the AFPs here, it's twofold. On the one side, pension funds in Chile have an effect on on the role and deepness of capital markets. So the role of institutional investor, not only in developing the capital market in Chile, but also the impact of the growth in the economy, have been well documented in some research papers, not only by Chilean economists, but also from other parts of the world. So I think that the idea of the role of private savings here and contribution to this type of systems have an effect on the economy through the capital markets. As you mentioned, Susan, in the case of Chile, the assets under management that the pension funds have today, it's approximately 80% of GDP. So it's 80% of GDP. So it's by far the biggest institutional investor in Chile. And also, it's not only about the role of pension funds in the capital market, because the effect that the pension funds have had in the history of Chile, in the real economy, let's say in infrastructure, in housing market, in mortgage, in credit from the banks, and the size of the interest rate that Chileans have access today to capital markets is mainly driven by the effect of the pension funds. So on the one side, there is an important effect, a crucial effect that is well recognized in Chile regarding the role of pension funds on capital markets. But on the other side, I think that something that is very important in today's discussion is that pension funds not only are a financial instrument or financial institution, it's also an institution that plays a role in social security. So on that side, the role of pension funds in the discussion has been also very important in the fact that today, when you see pensioners, when they get their pension, 30% have been their own contribution and 70% has been the return of the funds. So 7 out of 10 of the amount of pension that a person is receiving today in Chile have been going through the effect of the return of the pension funds and the job of the pension funds have had. So regarding the COVID-19 and what's going on today, Chile has in place the unemployment insurance. The companies that manages the unemployment insurance are the AFPs, the pension funds. So we have a social security safety net there. So people is withdrawing their money from the unemployment insurance, from the individual account, and also from the solidarity fund. So we have today different channels and institutions to go and help actual affiliates regarding the job losses and the change in the budget constraint they're having because of the pandemic. But also we recognize, as Bernardo was saying, that pensions have a role on the economy. We know that we are relevant actors. We have been talking with the government regarding a couple of initiatives. On the one side, we were discussing with the central bank and the supervisory body and the government in order to expand the limits that we have today to invest in alternative assets, mainly in the role of we can go and come in with specific issues in private debt and something regarding with medium enterprises, for example, and they already put a higher limit for pension funds. And on the other side, we know that our fiduciary role is very clear, and the law mandates us to have a good return and safety of the funds. So we understand our role that even though we're in a pandemic, we can be very strict and not be given like philanthropic investment regarding of what's going on. So in that sense, for example, we were talking with the government on trying to create a fund of funds for small, medium enterprises with a guarantee from the state, like a bond for a state company or something like that in terms of structure. And we are still debating in those type of things. But on one side, Chilean workers and our affiliates are asking us to maintain return of the funds and be very clear regarding the way we are we diversified our portfolio in order for our actual people that are going to pension in the coming years. The effect on the capital market does not affect that much the amount of money they have in their own fund today. And when you see data of the most conservative funds, that where the majority of the people that are at 5 years to retire are over there. If you see the return of the fund in the last 6 months or in the last 12 months or in the last 3 months, it has been positive. So the effect of capital markets, given our diversification of portfolio, has been reduced for people that are very close to the retirement age. So I think that covers a little bit, and we can continue talking afterwards.
Great, thank you, Fernando. So Diego, we've heard a little bit about the situation in Mexico and Chile, and I know you're looking after several of the other markets in the region. Can you give us your perspective on the role institutional investors are playing and the impact the pandemics have? You can pick the markets that you want to comment on.
Thank you, Susan, and thank you to the Council of the Americas for the invitation. It's a pleasure and an honor to be here. So international asset managers play, a relevant role, a very relevant role in the Latin America region. And I will cite some examples, of course, citing the case of BlackRock, which, as you can imagine, is the one I am closest to, and the different presence that we have in different countries across the region. In general, asset managers, the presence that they have in the region range from countries where we have a very 100% local presence. This is the case, for example, in Mexico, where we have local asset management capabilities from money market funds to traditional fixed income to traditional equities to infrastructure. And to the other extreme, we have countries like Chile, where we do not have local asset management capabilities. And in the middle, you have countries like, for example, Colombia and Brazil, where although we do not have the full range of asset management capabilities across the full spectrum of asset classes, we do have local manufacturing capabilities in specific areas like local equities or infrastructure. In all of these cases, regardless of the presence or not of local products, international asset managers serve as a channel of resources, either domestic resources through domestic vehicles to invest in domestic firms or projects, or also international assets channeled through vehicles managed by international asset managers to then invest in local companies and local projects. Just to get an order of magnitude, and I'm citing here numbers from BlackRock, the total investments of BlackRock in the Latin America region is $87 billion. And this differs in country to country on the source. In some countries, it is more sourced by monies from local investors to invest in local companies. In other countries, it is more international investors investing in local companies and projects. So, for example, Mexico, out of those $87 billion invested by BlackRock in the region, 37 of those are in Mexico. The majority of these assets in Mexico are local to local, so local assets invested in local investments. Brazil follows with $32 billion. In this case, it's mainly international assets flowing to our local economies, investing in Brazilian companies and projects. And then Colombia, Peru, and Chile, where we have $7, $4, and $6 billion invested in each one of these countries. And then an additional angle, and I think both Bernardo and Fernando alluded to it, is that the responsibility and the impact that we as institutional investors have in the development of our capital markets and our economies. In particular, I believe international asset managers bring to the table a couple of important points that are worth highlighting. One is the close interaction that we have with the regulators and the government in the countries, where international asset managers can also leverage the global presence to reference sort of the regulations taken in each one of these countries and compare that to other regulations in other jurisdictions. The second one is innovation in products. So best example here is the development of local ETFs in many of our jurisdictions. And then the third one is the introduction of best practices in asset management. The clearest example I see is infrastructure, where We have practices both in infrastructure equity and in infrastructure debt in our regional practice. So bringing best practices again in project finance to our markets is relevant. And one last point I want to make, and I hope to touch upon this point later in the panel, is that again, apart from the magnitude of the investments, we have a large responsibility again because of this large presence in our markets. But yeah, I think we will have more time to talk about that later in the panel.
Yeah, very, very interested to hear more about that as we get into the discussion. You know, prior to the pandemic, a number of the countries in the region had, you know, different situations of either social unrest or, you know, political transition. And, you know, each country has its own socioeconomic situation, but, you know, there were some common themes, and that's, you know, people in general were feeling that they hadn't received the share of the benefits of economic growth, and were calling into question, you know, the basis for some of the institutions. They're also, you know, feeling that they don't have adequate access to basic services. And so that generates a clear distrust in institutions, both public and private institutions. And so I'd love to, you know, the intersection between, you know, your roles as managers of, you know, massive amounts of capital and, you know, the social and political pressures, you know, on the markets where you're operating, how these interrelate, and what you see as the role of your institutions in this situation as well. Fernando, maybe I can throw it to you first, just to switch up the order a little bit.
Sure. Thanks, Susan. I think this is a challenging and very hard question to ask, but you're right. What we have seen, especially in a lot of countries in Latin America, I'm going to speak about Chile, is that, not also for the pandemic, but before that, there was a couple of issues regarding social unrest. And mainly it's because the perception of the population is that, the benefits does not come across in an equal manner to everybody. If you see the data in Chile, you can see that the levels of poverty and the numbers of inequality indexes have been getting better. But that's numbers. Perception of people is different. And there's have been a distrust in whole institutions from the government and private institutions. And regarding the pension funds, I think the point you mentioned is crucial because we need to understand that on the one side, we are asset managers and we have a role in capital market, but what society is expecting from at least for the AFPs, it's that we need to understand that also we have a role in social security. We are not the only actor in social security. This is something that we share with other stakeholders. We are part of a system, but we need to be very clear in the communication, in how we are more transparent regarding our results and how we get more closer to people regarding something that is so sensitive like pensions, because at the end of the day, this is something that affects the actual pensioners. But in every house that is an aged person over there, and in Latin America, old people tend to live with their daughter, sisters, or their own family. It gets that the problem of this pensioner is also a problem for the family and the rest of the society. So I guess that it's an interesting time. And let me ask something else here, is that since 2014, in the case of Chile, all the actors in the system, including the AFPs, we have recognized that the system needs changes. But it's true that the political arena have not been able to make the changes that the system has. And we have been discussing a reform in the last 5-6 years, and we have not been able to construct an agreement. And it's mainly because this kind of dilemma between some people that is debating how we get better pensions and the other one that is more an ideological perspective regarding of the distrust of the AFPs and the pension funds, and they go and say, okay, what we need to do is get rid of the pension funds, so to the private pension funds. So I guess that that this put us as the association, but as each pension funds by itself, in a position to be part of the solution, and in a position to recognize that we have both roles, a role in capital market, but also a very, very important role regarding social security.
Diego, how does BlackRock view this social and political dynamic that's playing out in the region?
Yeah, so I think the social aspect is one that Fernando has touched upon, and I believe Bernardo has as well. That is very relevant. And in general, there has been social unrest, and in some cases there has been some social unrest even against the industry, the asset management industry and the pension industry in our countries. And there's been also some political noise in other fronts. So, you know, in order to be able to invest the assets in all the good ideas that we are discussing, and we're going to continue to discuss to reactivate our economies, you know, I think it is very important to re-emphasize and strengthen our social license to operate. And social license to operate are very complex contracts because they involve many counterparties and stakeholders, employees, the communities, the broad public, and are, you know, are at the end earned over time through building trust. And our presence, and here I am talking about international asset managers and pension funds as well, is so relevant and dominant in these markets. And citing the words of a famous philosopher, Spider-Man, with great powers come great responsibility. We have great responsibilities in our markets for the development of the capital markets, as Fernando said, also pension funds in the regards of social security. And if I may, I wish to spend, you know, a minute or two on the purpose, because in order to strengthen our social license to operate, and this speaks to the whole financial industry and definitely to asset managers and pension fund managers, I think we need to better communicate our purpose. And I would like to cite very briefly, you know, apart from a letter that our CEO and Chairman Larry Fink shared to the CEOs of companies in 2019 on purpose. And purpose is not a mere tagline or marketing campaign. It is a company's fundamental reason for being, what it does every day to create value for its stakeholders. Purpose is not the sole pursuit of profits, but the animating force for achieving them. And, you know, in the case of BlackRock, we have evolved in this journey. I don't believe we are there. I don't believe it's really a journey. We will probably never get there. But, you know, the definition of purpose that we got to is we are aiming to help more and more people achieve financial well-being. And in our countries, we international asset managers and pension funds need to better communicate that social license to operate, that purpose, to the communities in which we are operating. And again, in order to be able to better invest and even shield these assets from the threats that have been happening recently.
Thanks, Diego. I think that's a really important reminder. Bernardo, before I hand it over to you to tackle the tough question, I'll just remind everyone, I see we have about 75 people in this discussion, which is terrific. So we'd love to hear from you. If you have a question that you'd like to put to the panel, you can do that either through the chat or raising your hand. I'm happy to call on you. So just a quick reminder, and Bernardo, let me hand it to you.
Thank you, Susan. I would say that I think this, I mean, after the pandemic, all this social unrest will exacerbate, particularly because of the inequalities that we have in the region and in Mexico. And as I was saying before, I think we have a large proportion of the workers that are informal, that they're working in informality, and they don't have a social protection network. And on the other part, the workers that do have a social protection network, it's definitely not enough. Fortunately, in our country, the pension reform was made in '97. So the workers that will start to retire on this system, on the individual account system, will start doing so next year. So, and we know that the replacement rates are going to be very low, around 30%. And that's because we've had really low contribution rates in the past, around 6.5%. When you know that OCDE suggests that that rate should be around 15 to 18% in order to achieve around a 50% replacement rate. So we know that's going on, that has happened in Mexico, that definitions of the law are wrong since '97. And we've been, as a country, pushing for making a reform since years ago. But as you can imagine, Susan, it's not easy to convince the government, the workers, or the private sector that they need to increase contributions from 6.5% to 15%, because it's really unpopular. So because it wasn't an imminent problem, no one really compromised to do the change. So right now we are in the last few months of the window that we have to make that reform. Fortunately enough, we've achieved in the private sector in Mexico an agreement so that the private sector can make that increase in contributions. That would be very helpful because that increase would be gradual from 6.5 to 15% in a period of 8 years. But it would solve a lot of problems, imminent problems that we have. For example, the replacement rates, particularly for the lower portion of the population that earns less money, they will have replacement rates of around 100%, 90 to 100%. So that's great news because we can increase the minimum pension, and also it helps us to reduce the amount of working weeks that you need to accumulate in order to have a pension. Right now, you need to work 24 years in the formal sector in order to get a pension. With the reform that we have agreed with the private sector, we could only need 14 years or 750 working weeks. So it's a fundamental change that people that can retire can go from 30% to 90%, and that's a game changer. Hopefully, we can really pursue that reform and put it through Congress. We need to convince the administration. And the administration, because it's very, I mean, we have some radical members of the regime, which is not only the people in the executive, which are the moderates, but also Congress. But they're pushing for profound changes in the system, probably try to go back to the defined benefit system. And we need to convince them that that's not really the way to go. I think it's a huge advance that we have standing with us, the Ministry of Finance. They really believe that what we need to do is strengthen this system, not reverse it. And we are in that discussion. But I would say that to answer in a concrete manner, I would say we have a window right now in Mexico to avoid social unrest we can expect that because of the profound crisis that we're going to live because of the pandemic, we could definitely make a reform and avoid that social unrest, at least on the part of the pensions in Mexico. So hopefully we can make that a success as a society. Thank you.
Yeah, we certainly hope so too. I think that's a really good transition to the first question that we have from our audience. You talk about transparency and communication, and you know, the population that you have to communicate with is, as the question says, it may not be financially fit. So what strategies do you have to, you know, address this gap between, you know, the benefits of the system that you're touting or the investments that you're offering, and the, you know, lack of understanding and awareness amongst the, you know, the population that you're trying to serve? So, you know, if one of you wants to volunteer to first. Fernando.
Yes, I can start here, Susan. The question is I think it's one of the main challenges that pension funds have today. If you see the discussion that pension funds, not only Latin America, but in the world are talking about in their board meetings, it has to do on one of the topics about pension communication. And I think we need to move forward in this topic. Probably one of them probably mistakes that we made before was considering that the financial education has to be done only for people to increase savings. And all the evidence there is not very clear when you teach people if they are going to increase savings or not. And then we came with behavioral economics and those type of things. But I think we need to refocus our financial education in order to move forward, not only to convince people to save more, but also to try to talk to different audience in order to explain what this topic is about. And I think there are different ways to do it. We are, in the Association of Pension Funds, in the last, I would say, 2 or 3 years, but mainly in the last year, we have changed our strategy. We are doing monthly webinars regarding topics like investment, for example, for the people. Each pension fund have been communicating in a more proactive way with their own affiliates. But I think this is something that we need to keep going on. And on the other side, and this is my view, I think that all people that are involved in pension funds should commit and use their social capital in order to start initiating conversation with different stakeholders. This is something that is hard to do. It's not just a marketing strategy campaign on TV. This has to do with small things in social networks, in media, in radio, in TV, in town hall meetings. And I think we need to move forward that type of communication in order not to make people increase their voluntary savings. That's something that, of course, will be great to do, but regarding to understand why the individual account is important, why contribution is important, why going back to like a normal pay-as-you-go system is something that a country like at least Chile cannot do it for different reasons, and start making conversation with different organizations, stakeholders, and be open to talk to people in context like this one, like the Council of the Americas, that is an amazing way to start conversations, but also to talk to people that thinks in a different way. And that's something that I think we, from the Association of Pension Funds, but pension funds themselves, are something that are start doing it. And I'm positive and optimistic that this conversation is gonna make some changes in the next months and years.
Great, thank you, Fernando. We have 2 more questions in queue. Before I turn to those questions, Bernardo and Diego, are you comfortable moving on to the questions, or you have something you want to add on this one?
I would like to comment on this part of the educational role of the institutional investors or pension fund managers, I think we have been, in regards to communication, terrible at it. It's not an easy subject. The financial sector is special in creating slang that no one can understand just to make a club of people that understand those terms. I think it's also a boring subject to a lot of people. Retirement, I'm saying. It's not very exciting and something that people doesn't really want to know about. So, for example, in Mexico right now, we are targeting people between 18 and 40 years old to make pensions a young people's issue. Because when you talk about retirement and pensions, of course, what comes to mind is people that are about to retire. And young people aren't really interested in talking about it. So we're making an effort also, as Fernando was saying, with webinars, with using all the social media possible to send the message of what Afores do, what we don't do, how we do it, how we invest money, the returns we offer, the fees that we charge. And it's a huge effort. And it's a huge effort that, as I can see, we haven't been successful around the region. And we need to more than, incorporate all the tools like behavioral economics, for example, but also have a very simple and precise speech on to communicate with people. But it's definitely something that we need to change, Susan, and it's part of the problems and it's part of the social unrest that we haven't been very good at communicating to our clients, to the workers.
Yes, maybe Susan, 2 words from my side. I think from our side, a couple of comments. One, we have been trying to bridge that gap between saving and investing, because we have seen through research we have done across the globe, people are over invested in cash, and putting that cash to work is fundamental for them to achieve their long-term financial goals. So we're putting a lot of effort there. And then technology is the other avenue that I think is important to highlight. We're launching in the US, an effort around leveraging technology for our defined contribution plans in the US, to help people understand on their cell phones, based on the money that they have right now, how much are they going to get income in retirement, and help them understand how little efforts on monthly contributions can immediately have repercussions on their retirement incomes, again, at the age of retirement. So I think leveraging technology to help people make tangible that effort, because the effort is tangible for them. They know that money is taken away from their paychecks. The one that people need to really understand better is, and technology can help, how that can benefit them and how big is going to be the benefit in the long run for that. And last comment here, I agree with Fernando. I think the financial education is not only to make for people to make additional contributions, but in the case of funds and in the case of pension funds in the region, help people understand that the money that they have in their funds and in the individual accounts is actually theirs. It is not a tax.
Yeah, I think that's a really important point. So let me suggest this. We have 2 questions. Let's take both of the questions first, and then we'll let the panelists decide who wants to take which ones. We have, and when you're asking your question, if you have video, if you can turn on your camera and unmute your microphone so the panel can see you. And if you're just on phone, that's fine too. The first question comes from Joe from BNP Paribas. Joe?
Hi, hello, good morning. So first of all, thank you so much for the meeting. Probably my question is relevant for all pension funds, not only in Latam, but across the globe. But I would refer to my general question is, what do you think are the main, I would say, we have been talking about the need of reforming the pension funds. But what do you think will be the main features of reforming? But once we take into account that this reform may have some demographic elements, but also may have some political elements. So which are the main, I would say, political pressures or political incentives that may play out in reforming the pension system? And in particular, to Bernardo, sorry, what do you think about recent comments from the federal government regarding the need for a pension reform, but referring explicitly to try to dismantle as much as possible what was implemented or transformed or constructed during the previous administrations? Thank you.
Thanks so much for your question, Joel. Our next question, and I am guessing it might be related, is from Roberto Walker of Principal Financial Group. Roberto?
Yes, thank you. Thank you very much. Can you hear me?
Yes.
Okay. Hello, everybody, and great to have the opportunity to be here and ask a question. Actually, I have an open question for Fernando, Bernardo, and Diego. And I think that there is a big elephant in the room that we are not referring here. As you know, pension funds in the region are managing more than $500 billion in assets under management. They have more than 200 accounts or workers supporting, where probably is one of the most important part of the world or the wealth of those workers. If we just consider Mexico and Chile, taking advantage of Fernando and Bernardo here, we're talking about more than $400 billion in assets under management and close to 76 million workers. Again, that these are very important savings for them, and actually it's the second most important saving for the workers. So we have seen a lot of debate about the pension system and reform, but the elephant in the room is that this amount of money, this $500 billion or $400 billion in the region, is a big amount of money and a big temptation for politicians. And at the same time, it's a big temptation in order to solve the short-term fiscal problem that some of our countries are facing at this moment, taking or using these funds in order to solve a short-term problem, despite this may create a huge problem in the at the long term for each of the countries. So the question that I have is that how well prepared do you think that we are in order to really be able to keep the system going forward? We have seen in all these crises that the pension system, moving from a pay-as-you-go system into a defined contribution system, had happened precisely in big crises. But also we have seen big reversions of the pension system also in big crises. And we saw that case of Argentina, and we saw also those cases in the case of some countries in Central Europe. And now they are in very bad fiscal and pension conditions. So this is a big issue. This is a big issue that is not only for the pension system, this is not only for the managers, this is a big issue for the financial sector. This is a big issue for the future recovery of our economy, as long-term saving are very important in order to finance investment to go after the recovery after the pandemic. So how well prepared, you, Bernardo and Fernando, you think that we are in order to really protect all the benefits and continue improving the system and avoiding any kind of big implication as the one that we are describing? And also a question for Diego, how active you think that the institutions different to pension fund managers have been in this discussion, and how aware and how more proactive they should be going forward, as this is not just a pension or administrator of pension funds money issue. Thank you.
Great, thank you, Roberto. If I may, because we have one more question, I'm just going to ask that we take that question quickly and then give the panelists time to respond to all three at once. So our last question is from Andres Moreno of Afore. Andres? We don't have your audio.
Sorry.
Now we can hear you.
Thank you. Sorry, and I have a terrible connection I hope I can get my question through. But you know, along the same lines of how do the panelists foresee the reform being implemented? I mean, it is quite clear for everyone from listening to you and to seeing the realities of our countries that having a system that depends on the formal sector job contribution creates a very bad equilibrium. And therefore, we have to incorporate the possibilities of having a general taxation or another source of resources, particularly to address the low pension that informal workers, or a great majority of our population will have upon retirement. So how do you foresee these? How could this system work? And Bernardo was mentioning something along those lines that he sees happening in Mexico. He mentioned rich people and poor people having separate systems, but that probably is a very bad equilibrium. So how do you see a stable equilibrium in which you have a system not fully depending on formal job sector contribution, so that we can increase permanently the replacement rate of our participants of the system?
Terrific. Those are fantastic questions, and we only have a few minutes left. So let me turn, Fernando, to you first to take any part of any of the three questions that have been posed, recognizing they're all related.
Yes, I think they are very, very much related. I'm going to go through the points that Roberto mentioned because they are very clear in the discussion with the first question that you raised to the panel, Susan. I think that after the pandemic and the crisis, there is going to be a huge competition of financial sources of every country. So countries will compete between each other regarding who's going to bring in more capital. And given that capital is scarce, regarding the financial institutions will decide in countries depending in rule of law, institutional quality, and those type of things. So the discussion of pensions is much more broader than just the discussion of a system, and I think has to do with the foreign direct investment in countries. And I think it's crucial for countries to be very clear of what is going to be in the future regarding those type of things. But regarding the elephant in the room, I think that countries, especially in DC plans like the ones that we have in Chile and Mexico and other countries, is the money is too much money. So you have a lot of money to do an amazing party for the next 10 or 15 years. So the political pressure is huge, and it's going to be very big, especially in a moment of democracy where populism is everywhere. And this has nothing to do with right or left wing, like traditional parties, is everywhere. So the pot is big. So I think we need to recognize and be very aware that we have that risk. However, said that, in the case, and I'm going to talk about the case of Chile, probably Mexico is different here. In the pension discussion, we can say that a couple of people are in the sense that we need to reverse our system. And there are a couple of senators actually doing that and try to proposing a bill in the topic. But when you talk with the majority of people in Chile and in political level, in Congress, in the government, the majority is not trying to revert the whole system. However, they would like to make some changes. And given the question that Joel was mentioning regarding the reforms, probably the biggest discussion in the reform in Chile is what we're going to do with the increase of the contribution rate. We know that we need to increase the contribution rate for 10%, let's say 15, 16%. The big question here from a political perspective is who's going to manage that 6%. The political system, it's clear that on that 10%, pension funds have done a great job, but there is a discussion regarding if we need to add some solidarity issue on that 6%, if we need to increase different type of institutions to manage that amount of money, and the discussion is regarding who's going to manage that increase of contribution. But yeah, that's probably the biggest issue regarding on the political side of the reform. We are aware that we need a reform. I think that probably the pandemic is going to put a little bit in status quo, the reform process. But I guess that our role here is that we need to be promoting that Chile needs a reform, needs to increase pensions in the future, and needs to protect one of other, I would say, highlights in Chilean economy, that is the pension system that we have and the development that we have had so far. But this is a wood pot, a big pot, and there are going to be always some sharks trying to get a bite on it. And we need to be very clear, and we need to work closely with government, with political parties, etc. in this topic. And just one last point, and probably this is going to be covered by Diego. Roberto was very, I would say, very cautious in the way he framed it. I'm going to be more, probably more free on saying it. I think that the whole discussion of the pension system, at least in Chile, have been protected the majority of the time by the pension funds by themselves. And I think there is a role for all the other stakeholders, in international institution investors, let's say other companies that have benefited from the pension system, to protect the system that we have. And we don't need to be shy on this. And this is something that we need to work together. This is something that is not going to be something that just the pension funds have to deal with it. We need more people on board here. And I raised that point to institutional investors, but other people also as well that might be in the room.
Thanks, Fernando. I recognize we're at the top of the hour, but I want to give Diego and Bernardo a chance. Hopefully you can stay with us just a couple more minutes. Diego, how about you?
Yeah, thank you. So, yeah, you touched a really important point, Fernando, and it is related to this discussion, recent discussion. You touched already on reform, but there is another discussion on the potential of allowing people to withdraw money from pensions in the region. And I think that, the Inter-American Development Bank, probably most of you have read a white paper produced by them in a very balanced way. Because governments at the end are facing a very challenging situation whereby, by allowing people to withdraw money from their individual accounts that are in principle dedicated for their pensions, and the arguments of the IDB are, on the positive side, this can definitely serve, if you will, bridge the financial gap of people in this period of crisis. That is true. And then there is also another positive externality of helping people relate to those individual accounts and make sure that they feel that they are their own, so that in the future they can potentially make further contribution. That's on the positive side. And then on the negative side, the arguments for not doing it are in the sense of, these withdrawals would not necessarily serve those in greatest need because of the great informality of our countries. One. Two, it would create, of course, a hole in the retirement income for people at retirement age. The negative impact, of course, of opening Pandora's box, because once you open this for this one argument, there will be a million more arguments to allow people to withdraw these monies in the future. And this creates a large burden on the first fiscal front. And there's one point, to the point of allowing people to withdraw money, not necessarily serving the people in greatest needs, that is relevant. And the paper concludes with the recommendation from the Inter-American Development Bank that this probably should be a measure of last resort to be taken by governments, and as much as possible shield these assets in pensions from that temptation. And I think the role of infrastructure investments is one where the use of these resources to reactivate the economies, as opposed to simply giving it away to people, is one that has to be further enhanced and reinforced. And the role of infrastructure is a clear one. Infrastructure investments are clearly the counter-cyclical measure by excellence to reactivate economies. And in infrastructure investments, there is a clear win-win-win situation in which, of course, people contributing to retirement systems expect higher retirement incomes, and for that they need higher yielding assets, and infrastructure overall in general represent attractive investment returns. The government is able to channel resources to this sector that creates employment and improves the productivity of the country. And better infrastructure, more employment, and better productivity creates more potential savings, which positively feed this cycle. So in some countries, and this goes back to the point of Fernando of leveraging the advantages. In some countries in the region, we do have already the framework, the institutional framework to allow and to channel resources from institutional investors into infrastructure. And this can be definitely an advantage that countries should leverage, and definitely that this is a conversation that we are ourselves also having with governments across the region and with regulators as well.
Great, thank you, Diego. Bernardo, let me give you the last word.
Thank you, Susan. Well, I think it's a very complex moment in the region. As my colleagues have stressed, we have governments with a huge charge of populism in their speeches, from left, from right, and also this is combined with a pandemic that we've never seen in our lives, and that an economic crisis that it's unprecedented. So in times of crisis, as someone said before, definitely eyes come to the pension system, and the amount of funds that we've accumulated in time are so big that, of course, they have to be in the crosshairs of politicians. So now, and I think your question regarding financial education, Susan, and understanding the pension fund system was so important, because we've done very poorly in that regard. And the first audience that should be defending this system, if it were useful for them, are workers, not pension funds, not government officials, not even the pension fund managers, but the workers. And since they haven't grasped the importance of having their own account, their pension fund system fully funded, is that we are facing such terrible, threats from populist politicians. So I think that right now we are in emergency. I think at least in Mexico, we have a very important window of opportunity to push for a reform in which the private sector is assuming the responsibility of increasing, and with this I try to answer Joel's question, to increase the low level of contributions that are established in the law in Mexico, and that would allow us to increase also the minimum pension that Afores will pay. So replacement rates can go from 30% to on average 80%. It's a huge change. We could also reduce the working weeks requirement from 24 years to 14 years. That would increase the amount or the proportion of the population that can retire from 30% to 90%. That's an amazing change. And also we need to separate the possibility of someone to have a pension of working only in the formal sector. The informality in our region is so profound and so complex to solve that you cannot have a pension system that is linked to formality. So in Mexico, the government of President López Obrador has stated a universal pension. We celebrate that. I think that was definitely a need, but it's not enough. So at the individual account system, in the retirement system, we need to offer a very simple way of to people to save and to have a pension guaranteed by Afores. And I think that's part of the reform that we are proposing also. And hopefully, again, we have the chance to do that. How we can push that reform, be successful, and avoid the voices that say that we should return to a defined benefit system. I think we need the workers. We're working with them. We need President López Obrador to convince him that this is a reform that can solve all the problems and the poor expectations that there are regarding the system, and show him also that this program, this system, has been very useful in creating macroeconomic stability in Mexico, that it has been also a fundamental part of the good results in fiscal policy. The president is very concerned with fiscal responsibility, and we can show him that this system has contributed to be a solution for the fiscal burden that pensions used to be for the Mexican government. So I think we have to use all the tools we have in our grasp, but in Mexico, we're not like in a scenery like, for example, Chile, in which social unrest has been already, has taken the streets. In Mexico, we haven't had one single worker retiring from the individual account system. So we have a window of opportunity of probably a year to pass that reform and avoid what, from my point of view, could be very damaging to the Mexican economy in case we reverse the individual account system, because of the repercussions regarding macroeconomic stability and another important consequences regarding investment in Mexico. So thank you, Susan, and thank you, everyone.
Thank you so much, Bernardo, Fernando, and Diego, for a fantastic discussion, and to the 50 or so of you who have stayed with us and participated. Obviously, we've gone 13 minutes over, and that's because of the high level of interest in the topic. So I just want to thank everyone, and thank you, Randy, for the council organizing this.
Our pleasure, and I think we have enough for another panel discussion. Continue. Thank you, everybody.
Thanks.
May you be healthy.
Thank you.
Thank you very much. Bye-bye.